Hey there, everyone. Ryan Shewell. This is my data science channel. Welcome. Welcome if this is your first time. Welcome back if you've been here before. So, in the project today, I want to talk about how we can create personalized financial service recommendations for all of our banking clients. So, I worked for a whole bunch of banks. I won't name all the names, it's just too many. It would go on and on and on. But we would always try to understand the customer's wants and needs and desires and what's motivating them to come to the bank and understand um, you know, what they need and then address the needs, right? And create that relationship between the banker, myself, and then the end client that could be you or your family or your friends or whatever, right? So, how do we understand people's needs and desires and then address those? And that's important for a few different reasons. We want to generate realistic customer data experiences dynamically. That's what we're going to do in just a minute. You'll see how that's done. And then cluster customers into buckets and use the features of the customers based on demographics like income, age, risk profile, etc., and recommend investment products for our customers, right? So if you're a high risk customer or you have a high appetite for risk, we can look at certain types of investments that might address your needs. They might return higher. They might generate higher returns, but they could generate definitely generate higher risk, right? There's always a risk return trade-off. Like if you have lower risk, then you get almost guaranteed returns. Higher risk, not guaranteed returns, but higher potential capital um, income, right? So that's how that works. So we can recommend financial products or services based on the characteristics of the customers. We just have to understand their wants, needs, and desires. And then we can sit down with them and discuss how to enhance the overall customer experience and create more loyalty for our customers, right? So it's a win-win, right? Win for the bank, win for the customer. So let me go ahead and create some simulated data here. Now, I don't have the actual data because I don't work in the bank right now. And even if I did, I can't disclose personal data, right? This is called PII, personally identifiable information. That's kind of a tongue twister there. PII, right? I can't go into a customer's records and even look at their name. You might have address, things like assets, zip code, where they live, education, years employed at their with their work, risk profile, age group, things like this. A lot of times the PII stuff is abstracted away, right? It's encrypted, and you have to decrypt it to actually get access to that. A lot of times you don't even know who the customer's name is if you're doing data and analytics like I would do. If you're customer facing and looking directly at the customer, then you would know their name, right? But PII is an important barrier. If you're doing the analytics work like we're doing right now, you don't really have the customer's name, right? If you're client facing or in front of the customer, then you would know their name, because if you say, hey customer, how are you doing, you wouldn't even know who you're even talking to, right? You have to make that relationship. So let's assume this is kind of quasi in between PII. So we have the customer age, income, assets, zip, education, years employed, risk profile, and age group. And we're going to go ahead and create clusters of our customers based on a couple of different features here. We're going to look at categorical information like education, risk profile, and age group. And the numeric information is annual income, total assets, and years employed. And if you look close, years employed, age group, and then annual income. Annual assets, years employed, and total assets are numeric. And then education, risk profile, right there, risk profile, and age group are not numeric. So in the machine learning world, this is very important. You have to distinguish between what's a category, right? This is like a label or some type of text or some type of language or message, right? You have to encode those using some type of encoder. There's three primary encoders: label encoding, categorical encoding, and one-hot encoding. You have to take this and transform anything that's a language into numerical representation of that language, or the ML model can't understand what you're talking about, right? So machine learning model understands annual income because that's the number. Total assets, the machine learning model totally gets it, right? That's the number. Years employed, the ML model knows what that is. Like a zip code is actually, it looks like a number, but it's not a number. It's actually a categorical code. Education, risk profile, high, low, age group, these are not numbers, right? So we have to take this and transform that into another representation that the machine can learn. And once we can do that, we can go ahead and do a clustering exercise and then separate all of our customers into a couple of different buckets and make better recommendations for our customers based on these criteria that we set up here, right? So education, risk profile, age group, this is going to define the customer. These are features that define the customer. Are you younger? Are you older? You have a higher appetite for risk? You have a lower appetite for risk? What is your educational background? You have like a more advanced degree or a lesser advanced degree, right? That's what we want to know. And based on these numeric representations, we're going to go ahead and segment or cluster our clients into a couple of different buckets. So you can see down here, annual income and total assets. So annual income is on x-axis, total assets is the y-axis, right? So you have the horizontal and the vertical. And you can see two separate distinct groups right here, separated very nicely, very clean. Anything that is dark blue is customer label 0, and anything that is yellow, customer label 1, right? So we have these customers in different buckets. And based on those buckets, we can start to do recommendations for investments, again, to customize our service to the customer. Like if it's a high risk profile customer and they said, I have an appetite for risk and I'm willing to lose some money, but I understand I can make a good return on my investment, right? And if I lose some, okay, God willing, that's what happened. That's what turned out. But I have some money that I can spare, right? Like if if the outcome is a bad scenario, that's okay. So let me try to make more money and I'll assume a higher risk. There's some people that don't want any risk. They just want guaranteed returns, right? And I'm putting my money with you. I just want to make 2-3% guaranteed. I don't care about high returns because I'm scared of the market. I don't like uncertainty. I don't like risk. So don't talk to me about risky investments, right? So we have to profile these clients into different buckets and create like a recommendation system so we can address the concerns of the customer and meet their needs, right? And give them what they want, right? And give the customer, have a satisfied customer and give them high-end customer experience. So that's what this is about. So I created a simple user-defined function right here called recommend services. If cluster equals 0, then basic service budget plan. If customer equals 1, retirement plan, tax deferred, high yield. If customer's 2, if customer's 3, we actually didn't even have any of those, right? So you could change the number of buckets. Oh shoot, let me save this. Let me refresh it. Okay, go off on a tangent just for a couple seconds, just to illustrate the point here. We can have as many clusters as we want. I think 2 makes sense in this point, but I actually set up the script to accommodate more clusters if that's necessary. Okay, so let me see here. Let me do a quick refresh. Okay, so we have our customers, we have our segmentation here. So if I go back here, yep, that's good. Everything is fine over here. So if I go up to 4, we can see 4, control enter, refresh that, control enter. Now the segmentation is going to be a little bit different. We don't have clear, distinct groupings. Whoops, I'm sorry about that. Clear, distinct groupings between the customers. The layout is similar, right? So you have a little overlap. We have the yellows down here and the purples over here. And we have some in-betweens. If I zoom in, it's kind of scattered over here. Right, so I have up to 3, 0 through 3. If you go down here, you can see the cluster 0, 1, 2, 3. Python is 0 based. Excel is 1 based. So if you use Excel, you always start with row 1. If you use Python, you start with row 0. 0 is just the beginning. That's how they set that up. So the clustering is a little bit different. I think 2 makes more sense, but if you want to use more, you can change that to more. I'm going to switch back to 2 right now, control enter, and then replot the cluster, and we get the definitive line between the yellows and the purples. I think that looks nice. But we can accommodate more needs if the customer or if the business that we're working with, the what's it called? Like the stakeholder that we're working with needs that, then we can accommodate more. But based on this, we have the basic savings and budget plan. This is the thing we're going to go to and talk about with the customer, right? This is the topics that we're going to present so we don't waste our time, so we don't waste the client's time. This is basically what they're interested in. This satisfies their wants, their needs, their desires. This is what we should focus on, okay? So we should, at this point, start sending targeted marketing offers based on the clusters that these clients fall into and start assigning personalized account managers based on the cluster that these clients fall into, start suggesting mobile apps or tools or educational workshops that these customers can engage in, again, based on the cluster that they fall into, and start flagging upsell opportunities for the bank, again, based on the account manager's capabilities to understand the clusters that these clients fall into. So at this point, let me create a PCA analysis. So this is principal component analysis. We don't have high definition features. So if you have a lot of columns, we can take a lot of columns and reduce that to just 2 and look at the 2 most important columns. If you have, let's say, dozens or several dozen columns or hundreds and hundreds of columns, we can take all the columns and reduce that to 2 columns that make the most sense, that represent the client based on the orthogonality or the perpendicular juxtaposition of the data points, right? So this is a high dimensional concept to take all these features and reduce it into just 2, right? So if you have dozens of features or hundreds, you can reduce it into just 2 and see the separation of these features, and you see it nicely between the yellows and the blues right here, right? So all the yellows are on the left, right, cluster 1, and the blues are on the right, cluster 2. So this experiment works really nice. So the purpose of this is, again, taking high dimensional features, 10 plus features, 100 plus features, lots and lots of features, and just project that into 2 principal components for visualization and understand which 2 components project the most influence onto this decision-making capabilities or decision-making importance of what the clients need here, right? We're trying to satisfy the client's needs and help them to get what they want and help the business to operate efficiently, right? So are customers and clusters well separated? Yes. Do certain financial profiles cluster naturally? Yes, you can see that in the imagery here. Can we explain the clusters to stakeholders visually? Yes, we can do all that, right? So we've achieved the mission accomplished. So in this user-defined function, I'm saying, show me investment recommendations. If risk profile is high, then we can explore ETFs. If risk profile is medium, then maybe we can assign a robo-advisor. And if risk profile is low, then consider CDs or short-term bonds or ladders, right? So we adjust the risk investment opportunities based on the profile of these investors. So let me hit Control Enter to refresh the cell. And I'm going to share all this code with you. You can copy and paste it. You can run it for yourself. You can make modifications to the code, enhancements, and changes to the code and see what the outcome is. So now we have the original recommended services and we have the investment advice. So here, this is a risk-adverse client. I can tell they want basic savings, budgeting, and they will be invested. They'll be interested in CD investments and short-term bonds. This is a retirement planning person, tax-deferred investments, CD, short-term investments, retirement planning, CD investments, okay, and so on and so forth. So let's level up a little bit right now. Let's look at credit, loans, and credit product matching. So we know the client's profile pretty well. We know the recommendation services. We know the investment advice. Can we offer loans or credits to these customers, right? Like maybe a car loan, maybe a home loan, maybe an additional credit card. If they have 1 or 2 cards, maybe they want more. Maybe we have an offer for 12 months at a discount rate, 18 months, 24 months, whatever. There's so many things out there. It's hard to wrap your head around it. So again, based on the profile of the entire user, based on the recommended services, and then how risk savvy the person is or how risk adverse the person is, we can make loan offers to the person and check eligibility for personal or debt consolidation, right? These seem to be ending up in the same place based on this logic, but this is what you have to focus on here. If annual income is greater than 90,000 and total assets are greater than 1,000, this can pre-qualify for a low-interest mortgage. If annual income less than 40,000, consider student secured debt or review credit building, right? So if you're making less than 40,000, maybe you're a newly graduated student, you're not making a ton of money, you want to consolidate your debt in a low-interest environment, and the bank can help, right? If you're making over 90,000, maybe you're getting more established in your career, you're becoming more mature, and you're looking to make more investments, right? The student probably isn't making tons of investments or paying off the loan. The person that has no debt and no loan is probably interested in investments, right? So we have to allocate and delegate accordingly. So now we have another user-defined function for literacy content. If the age is less than 25, how to start building wealth. If the age is less than 35, or if the age is less than 35, start investing and home ownership planning. Or if, okay, this is else if. So we have the if, else if, age less than 50, tax advantage retirement strategy, else if greater than 60, required minimum distribution and estate planning. So estate planning is like setting up a trust. How are you going to allocate your assets after you pass from this world, when you are removed from this world? Okay, and when you go into the next life, who is going to control your assets? How are your assets pass your heirs into your be, what is it called, bequeathed or whatever, sent off, whatever. I forgot the term. I used to know these things. How your assets pass on to your heirs, pass on to your beneficiaries, right? Like, how is that done, right? So let's hit Control Enter to create another category for these guys. So education content. So this is what we're doing, right? The whole point is to cluster clients into these buckets, right? Based on their risk profile, their overall financial education. You're making recommendation services. We're giving investment advice. We're offering loan credit services, right? Educational content, required minimum distribution, right, from your estate if you're an older person, smart investing if you're a younger person, right? So we're creating these risk profiles or these age profiles, and then personalizing this financial service and making recommendations for clients, again, to make it efficient for the bank to identify with the person that we're interacting with, and make it efficient for the person to derive the best experience from what the bank can offer them, right? So here I create another user-defined function, banking optimization. If average monthly spending greater than the annual income divided by 12, set alerts and high spending. Otherwise, encourage opening a savings CD account. So let me Control Enter and create a new column, right? So now we're looking at average monthly spending, and then banking behavior tips. Offer overdraft protection, right? If you're spending too much, maybe there is not overdraft protection installed or engaged on your account, and you have to set that. Like, I don't know what this is offhand, but I think if you overdraft or if you overspend on your account, they charge you $25 or $50 or $100. I don't know what the amount is, but there's a penalty for taking too much from the bank. They'll give you a short-term loan, but you got to pay that back, right? Or the bank is gonna shut down your account, right? So there's overdraft protecting. If you're a big spender and you don't have this set up, they can recommend that, right? So set alerts for high spending recommendations and set alerts for high spending recommendations, right? So there's another category that we can define. So this is cluster-based reconciliation, focus on basic savings and mobile apps. If the cluster is 0, if the cluster is 1, retirement planning. If the cluster is 2, real estate business opportunities. If the cluster is 3, advanced management and direct investing, right? So this is for a more sophisticated type of investor. And again, we create a new column. We append that onto the data frame. That's what we're doing in this scenario. And now we have cluster services. So focus-based savings and mobile alerts, right? So focused retirement planning and advantages and different investment opportunities. So we just look at the risk profile or the investment profile or the educational profile of the customer and try to offer the best customized services that we can offer to that group, okay? And I'm not saying this is the definitive way to do that, but I think this is a very good first start to how to get our heads in the game and how to get aware of the customer needs, satisfy the customer needs, and if the customer's happy, they're going to come back, right? And if you're totally disengaged from your customer and you don't understand their needs, or you're making recommendations that they can't understand or they don't appreciate, they're probably not going to stick around, right? They're going to go to another bank. They're going to go somewhere else. And it's not just banking. This can be for any kind of retail experience, right? Understand your customer. I'm just saying this is personalized experience, in this case, financial services, right? I worked in a lot of banks, but understand your customer. KYC, understand your customer. KYC, know your customer. Know your customer. KYC is know your customer and deliver the experience that your customer wants, personalize it, and create an engaging relationship with them, and they're going to come back, right? They're going to be happy. You're going to be happy. Everybody wins. So cluster-based records based on the cluster. focus savings, while alerts, real estate and business opportunities, or advanced portfolio management. And this is very customizable. It's really up to you and your team. Talk to your stakeholders, see what they want to do. If you're the data analyst or the data scientist or the ML engineer, or you do advanced analytics, that's the kind of work that I do, advanced analytics. Right, this is like what is it, like the domain expertise, right? Like we understand the needs of the business, but the end user, the SME, the subject matter expert, understands better than me, so he can write the definition, he can create the the use case scenario, he can write down, and then I can create the code and create the report. Okay, so in this case, milestone edge, if age less than 25, great time to open Roth. Otherwise, else if, this is the same logic. If that's true, else if, start planning for your first family expense. Else if, and that could be a cruise, it can be going on a nice vacation. Else if 45 to 55, check retirement readiness. Else if greater than 65, explore retirement options. Control Enter to refresh the cell. Let's see what we have over here in the report. The report is coming together very nice. So we see originally the cluster, the recommendation service and investment advice, loan credit, educational content, average spending, banking behaviors, customer service, life cycle nudge. At this point, like, yes, what are we doing based on the age group of the customer? Are you younger, middle age, older age? Based on your age group, we're making certain recommendations, right? Again, to satisfy the customer's needs, to help them to make informed, intelligent decisions and keep coming back. We want repeat business, right? It's always easier to keep the customer that you have rather than go out and beat the bushes and look for a new customer, okay? If your customer's happy, just keep them happy, keep them satisfied, do whatever they need, do whatever they want, make it efficient, make it an enhanced experience for the customer, and engage with that person, and they will come back to you again and again and again because their needs are being met. If you're disengaged and you don't understand the person, are they coming back? Maybe, if they don't have any other alternatives, but maybe not. I live in New York City. There's a lot of banks around here. I can go to a bunch of banks. I go to one because they take care of me. I don't know if they do these experiments I'm doing right now, but they know me pretty well and they take care of me, and I keep going back, and it's easy, and I just stick with them because there's friction, right? If I get out of the relationship and I have to close down on my account and move it over to another bank, there's some friction, there's some labor, there's some effort to do that. And I'm not even motivated to do that because my bank takes pretty good care of me. And I think they do some kind of exercise like this. They've never shown me anything like this, whatever. I came up with this all by myself. But I think they do something so they can have a way to engage with the customer and make intellectual, intelligent decisions and keep me coming back and keep all the customers coming back for additional services as needed, right? Like they're not pushing anything on me. There's no sales relationship whatsoever, but it's like, how can we help you more? How can we make you more, help you to make more intelligent decisions based on the information that we have? So why is this useful for savings and budgeting? Recommendations, investment recommendations, loan and credit product matching, right? That's important based on the investor profile or the risk profile or the customer profile. Education, financial literacy, banking behavior, optimization of the experience, right? Behavioral and clustering based recommendations, and life cycle, milestone engagements, and nudging the customer into a new area that can help them. And don't necessarily upsell or cross-sell if you don't have to, but understand the customer and make recommendations. And if they want, that drives the conversation, right? But don't force the customer to do anything, but just mention it and tell them what is available, and they will make their own informed, intelligent decisions. And it's going to be a very synergistic experience, right? You create synergy, so 1 + 1 = 3, right? So create synergy, create something with nothing. So that's it. I'll wrap it up right here. I will post all the code when I post the video, and I will see you guys very shortly in the next video, which I'm going to put out a little bit later today. Thanks for your time. Appreciate it, and I'll see you soon. Bye.